Despite the company's record-breaking profit line for the most recent quarter, Tesla's stock price is currently at a low point, due in large part to Elon Musk's Twitter antics. Tesla has been going through a confusing trading phase. The manufacturer doubled down on discounts by the end of 2022. But this could not stop the stock price from falling. Tesla is not a company that should be evaluated based only on its stock price, and many evaluations do not account for a number of growth elements in their forecasts. Hi everyone, we hope to see you again at Tesla tomorrow. Exclusive reports claim that Tesla intends to produce a fully autonomous car that might retail for less than $33,000. Although Tesla's completely autonomous driving technology is still in the beta stage, it has been suggested that the company may produce a car that can run full self-driving software, or FSD, for less than $33,000. Whole Mars Catalog, a Tesla promoter, claimed that Tesla cars don't cost an extra $15.00 and include with all the technology needed for FSD. In order to make it easier for Tesla to someday implement fully autonomous driving technology, he appeared to recommend that the hardware be installed as standard on all Tesla cars. Many observers of Tesla think that the competition in the EV market has been catching up to the company for a while. Although Tesla has distinguished itself as a leader in the electric vehicle industry, an increasing number of well-funded rivals, such as General Motors, Ford, and Mercedes-Benz, are attempting to challenge its market leadership. Will Tesla continue to dominate the EV market? Keep watching to find out. Before we begin, though, please click the like button, subscribe, and enable notifications if you enjoy this type of content, so that you may be informed on everything Tesla. Although Tesla has long held a commanding position in the EV market, competition is becoming more diverse, with ordinary cars available in a range of body styles and price points in addition to really luxurious high-end models. According to a recent analysis by a data firm, Tesla's percentage of newly registered EVs in the US was 65% as of the second quarter of 2022. Down from 71% the year before and 79% in 2020. Furthermore, projections indicate that by 2025, Tesla's EV market share would drop to less than 20%, while the number of EV models is anticipated to increase over the next several years. According to the survey, Tesla will have challenges in maintaining a dominant market position in the future due to the increase in customer choice and interest in EVs. As new, less expensive alternatives that have comparable technology and production quality enter the market, Tesla's position is changing. The business still dominates all others by a wide margin. Nevertheless, in spite of this, in 2021, the carmaker sold just over 936,000 vehicles, giving it an almost 14% market share. Despite worries about the demand for EVs, Tesla is expected to dominate the market in 2023. Adam Jonas, an analyst at Morgan Stanley, believes that 2023 will be a turning point for the EV market, with supply surpassing demand, which would mostly favor Tesla, replacing the previous 2 years of demand exceeding supply. There are still some investors who don't think there will be enough demand for EVs anytime soon. The truth is that these cars are gaining popularity quickly, and more people are realizing how important it is to own one. The U.S. Department of Energy claims that because electric cars transform more than 77% of electrical energy into power at the wheels, they are more energy efficient compared to gas-powered cars, which only 12% to 30% of the energy stored in fuel is converted into power at the wheels. That is a significant difference. Furthermore, EVs are a more ecologically beneficial mode of transportation. The potential of EVs to reduce their environmental impact while driving is one of its main selling points. In contrast to fossil fuel power sources, a vehicle that runs on electricity produced by nuclear, hydro, solar, or wind sources doesn't emit any pollutants. Additionally, EVs often have a shorter range than gas-powered cars. While some EVs can travel 100 or 300 miles between charges, the majority can travel at least 100 miles. Nevertheless, compared to internal combustion, this is typically a little more constrained. The sale and uptake of electric vehicles are also being influenced by a number of variables, particularly government incentives such as tax rebates and reduced interest rates on EV loans. Many investors concentrate on the effects of Musk's acquisition of Twitter, ignoring Tesla's potential to gain greatly from the expanding EV market. According to a recent report by Wedbush analyst Dan Ives, Musk has been using Tesla as his personal ATM to continue funding the social network. making it a nightmare for investors. This might not be the case soon, though. Many people don't realize how many ways Twitter may benefit Tesla. First, the social media site can assist Tesla in keeping abreast of developments in the electric vehicle market. Additionally, Tesla may use Twitter to interact with consumers, respond to their inquiries, and post images and videos of its most recent news and products. Additionally, Tesla can expand its business by utilizing Twitter's information. Some investors have come to the realization that Musk effectively paid for Twitter's data. In addition to the platform itself, as of 2022, there are about 450 million active users on Twitter per month. Just think of all the data that Elon Musk will have access to if he owns Twitter. Musk wants Twitter to serve as a venue for free speech, but he also wants it to promote his other businesses. Users of social media are at the mercy of algorithms that gather information about them and use it to keep users on the site for as long as possible. In order to generate more revenue from advertising, Musk might then utilize this information to affect the market for SpaceX and Tesla, two of his businesses. Musk might use Twitter's algorithmic data to promote Neuralink, a firm that develops implantable brain-machine interfaces, of which he is also CEO. All things considered, Twitter is a fantastic marketing tool for Elon's businesses. The CEO of Tesla is going into a market with a lot of algorithmic power, and he will probably gain a lot from it. Additionally, Twitter can be used to collect user profiles for products such as the robo-taxi. The Tesla bot might also be developed with some of Twitter's data. Although there may be some question about Musk's promise that Tesla will someday profit from his ownership of Twitter, lifelong Tesla enthusiasts should take note. According to Cathie Wood, Tesla is headed for enormous success, which will have a big effect on the stock price of the company. ARK Invest, Wood's company, has been purchasing Tesla stock in spite of the ongoing decline in share price. Future stock price increases for Tesla might be caused by a number of causes, including the automaker's aspiration to expand in the fields of robotics, artificial intelligence, and energy. Additionally, Wood thinks that Tesla would benefit greatly from deflation since it will allow for expansion. According to her, automakers will probably have difficulties after the disruptive innovation brought about by deflation. Future market problems may be difficult for businesses that prioritize short-term profits above innovation. Automakers may also have to offer their products at a discount or risk suffering significant losses if their products become outdated. According to Cathie Wood, the decline in the demand for oil will propel the emergence of electric vehicles, EVs, and as fuel prices continue to climb, gas-powered cars may eventually become outdated. This has sped up the transition to electric cars, despite recent declines in gas prices. More people and companies are considering electric power as the mode of mobility of the future. Another possible growth engine is Tesla's solar energy division. The company's energy generation and storage sector, which includes three primary products: solar, its Powerwall storage device, and its Megapack, generated around $801 million in revenue in 2021. Even though Tesla hasn't given its solar company its whole attention, there is still time to maximize it in the future. In the next 5 to 10 years, Tesla might become a multi-trillion-dollar firm if it can direct more of its emphasis into its autonomous business. Do you still believe that investing in Tesla stock is a once-in-a-lifetime opportunity? Tell us below. Feel free to tap on this following video on your screen to learn more about what Tesla has been up to in the last few days. I'll see you there.